Hey everybody, RJ Baxter here with Fairway Independent Mortgage with your weekly market update. First of all, happy holidays to all of you. I hope you guys all have a great holiday season with your family. And I'm so thankful for each and every one of you and the opportunity to work with you to help you realize your dream of homeownership or to refinance your mortgage. So now let's get on to the market. So first of all, the data that came out this week was actually pretty decent. Housing data came out decent this week. Existing home sales were strong still. So it's interesting to see that because there's a lot of talk about what's going on right now with the stock market going down quite a bit this month. It's the worst December in a long time, literally in decades. And this week we saw the stock market go down again quite a bit, and especially after the Fed meeting on Wednesday. So I wanted to focus on that for this week's market update and talk about what happened. Why did the stock market go down so sharply on Wednesday and Thursday? And a lot of it is the language of the Fed meeting. The Fed, as you might have heard, hiked rates by 0.25%. Now, that does not mean that mortgage rates went up. In fact, mortgage rates have gone down this week after that announcement. The reason why is what the market was looking for. It was expected that they were going to raise rates by 0.25%. So that was already kind of baked into to stocks, to bonds. But what the market was looking for was the language in the Fed announcement that happened Wednesday at noon Colorado time. And what the market wanted to hear is that the Fed was going to back off a little bit on these interest rate hikes. And even they did say that they're going to back off a little bit. They projected now 2 rate hikes in 2019 instead of previously they were talking about 3 rate hikes. But the market was looking for a little bit less aggressive stance going into 2019 in light of what's happening right now, especially with the stock market. So the market took this as a little bit of a surprise, and it's added worry to the market, and that's part of why the market's plunged so much, because higher interest rates can be a drag on the economy. Higher interest rates can lead to a worse economy. It can lead to a recession. And the fact that of what's happening right now with the stock market, people are looking at that, and with the Fed saying they're still going to go in with more rate hikes next year, even though they curbed it back a little bit, it spooked the markets a bit, and that led to the decline. And that's part of why mortgage rates declined as well, because as money goes out of stocks, it tends to go into safer investments. People want to put their money in safer investments in a poor economy. So money went into the bonds that back mortgages. Therefore, we've seen an improvement in mortgage rates this week. So that's just a little bit about what's been happening. If you have any questions about that or anything regarding your loan scenario or need help with anything loan related, just give us a call in the office. We're happy to help with that. And once again, you guys have a happy holidays. Thanks for watching.